Right, hello and welcome to the Trade of the Day for the 14th of March. We've got a bit of a special one today. We're going to be looking at the cryptocurrency markets, not normally something that we cover on the YouTube channel. This is from our complete crypto trader course. In particular, we're going to be looking at Bitcoin as a market that's been hot in the news over the last few weeks and months. Why has it been hot in the news? I mean, plain and simple, the market has been absolutely exploding. As it tends to do, these markets tend to be quite cyclical. People are making a lot of money just buying and holding this, let alone trading it. There's more money to be made by actively managing your positions, of course, which means that not only has there been more interest in general, we've seen a lot more people asking about these. So we wanted to make it clear we are trading these markets. We're focusing on doing so in a safe way. It's the most important thing when it comes to these markets. They can be quite volatile. You need a strategy that can handle that volatility. And if you can handle it, then there is a lot of money to be made. But the risk is high if you don't have the right techniques to approach this because the market does drive on sentiments. So you need to be considered in your approach. What I'm going to do today, I'm not going to explain the entire system. I'm not going to explain the way that these crypto markets work. We'll teach you that as part of the coaching course that we have here at Trend Signal for this. I'm going to go through a few opportunities just to give you an idea of the potential that's out there. And if you want to find more out about this, then you can get in touch and we can put you into a session and we can have a phone call. My name's Tom, part of the trading support team. If you want to speak to somebody about crypto, I've been in these markets for years now, so I'm quite a good source for it. The way that we trade these markets is not a one-size-fits-all approach. There are people who just want to buy and hold, forget about it, and come back in 5 years and hope that they're a millionaire. Is it the smartest way? Not particularly. These markets are cyclical, as I mentioned, but you can do so. If you wish to do that, perfectly fine. We'll show you at least where you should be buying and selling these markets, or trying to get you better entries than just blindly holding over the long term. What you can see on here is a weekly chart. So this is looking at price over a very long time, going all the way back to the start of last year. And just to give you an example, the most recent trade we had on here was towards the end of October. You can see the entry point by the close of the candle. We always enter on the close of the candle on every single time frame. So you see where that C value is just underneath indicators where I pointed a second ago. The entry was at 34,525.89, and it's gone all the way up to about 72,000 USD. Fantastic return if you are buying and holding. We think we can do better than that. We can teach you to manage these positions. And that doesn't mean take your profit, sit on the side, leave it in cash and let it rot away to inflation. That means that you can take this, you can then move into another trade, whether that's another trade on Bitcoin on a lower time frame or a different crypto asset. I particularly like ETH, or whether that's a stock or a currency or whatever you choose to trade. So let's not long this video out. Let's get into these entries. Let's show you these opportunities we've been taking. And if you are interested, again, we do workshops on this. I'm sure there'll be a link in the description or at the end of this video. So starting on the weekly, so each one of these candles is worth a week's worth of price action. We're going for slow entry signals. Now, slow means that we're looking for the best possible opportunities, the creme de la creme. We're not interested in taking every single possible entry on this. We're just waiting for the safest ones. We're going to go for a trailing stop. Now, trailing stops are really useful. A problem that a lot of traders have when they come into these markets when they're trading like this is you get an entry like this. It started in October. It's been going up and up and up and up and up and up. And as I mentioned, if you're somebody who's just looking to build a portfolio and hold this for 5 years, 10 years plus, great. You've got what you wanted. But if you are somebody who wants to manage this, where do you exit this trade? This looks fantastic. Most people aren't going to want to sell out of it because it's been performing so well. We use these trading stops to keep us honest, essentially. It means that we know that when the trade is losing momentum, we can hop out and we can approach a different market. For this particular example, we use a fast stop. This is the most aggressive exit strategy, which means that the trades are going to last for quite a bit shorter than compared to the slow. We have our entry, the green circle, the exact same one that I showed you without the trailing stop. We have a close from the top value at 34,525.89. We follow the dots. This is a trailing stop dot until it hits the price action, and then we close the opportunity. This does two things. Not only does it do what I said, which is take you out of this trade instead of just waiting for weeks and months for it to exit, but it also takes risk off the table. Probably one of the worst things for a trader is when you get a successful trade, it moves up a couple of pips, and then you don't lock it in, it turns back against you and ends up being a loss, and you've turned a winner into a losing trade. These stop dots essentially take risk off the table as you progress. And after a couple of weeks on this trade, we hit a point where we're break even. We cannot lose this trade at this point. We can only win it. The question is, how much are we going to win it by? We follow the trade up, hits the price action, and we exit. We exit for around about 41,000 USD. which works out as approximately about an 18% return on your account. 18%, that's unleveraged. You can trade this through leverage if you wish to as well, of course, through Kraken or Binance. If you're just buying, you can use Coinbase, or there's plenty of options out there. We'll teach you as part of the course. But 18% just for spotting this entry, having the patience and discipline to not mess around with it and take stupid entries, and then exiting a couple of weeks later. Now, you may want more opportunities. You can move down to the daily. Maybe you don't want to trade once a week. Maybe you want to trade every single day or 5 days a week or whenever you choose to. Let's go for the best entries again. Let's go for slow. Let's also have a look at medium trailing stops. So we're looking to give this trade a little bit more room to breathe. We have the last entry here, taken on the 28th of January. Look to the close to tell us when we took it. So we would have taken this at $42.031. Follow the trailing stops. And over time, you'll get to a point where you break in. This is now a winning trade. It cannot lose. And it's just a question of how much we win by. We follow it up. We hit the price action. We exit. And if you'd have followed that trade as the dots had told you to do so, you'd have made about a 21% return, approximately. 21% for turning up, running these tools, sitting your entry, sitting on your hands and waiting patiently for the market to turn back around. And now you're out, and now you can trade another potential trade, either on a lower, higher time frame or a different instrument entirely. If you want to get more opportunities, have a look at the 4-hour charts. We also do intraday trading as part of this. Let's go for a slow entry. So still looking at the best, going for a slow trading stop. So we're really giving the market time to breathe with this trading stop. You can see it starts quite a bit deeper for that reason. We have our entry here on the 7th of March. We have the close of the candle at 66,905.34. We follow the trading stop. As we follow it up, we hit a point where we hit break even on the trade. We're now winning. We're now waiting to close out this opportunity. We do so at approximately 71,000 USD, which gives us about a 5.8 or 6% return on this particular opportunity. And if you want even more, if that's not enough for you, you want to trade this on an hourly basis, you can do it for 24 hours a day. I definitely don't recommend it, but as much as you can, whether that is you sit down for 6 hours, you know you can trade for 6 hours, or maybe you have half an hour at lunch and you want to jump into these markets, that's perfectly fine. You could look to see what's printed on that hourly candle and trade from there. Our last entry on here, let's ratchet this to fast, just to put a bit of variety in there. We have our entry, okay, green circle, we have our close, 72005.37. We have our stop, we follow it up, we get to break even, we exit for a profit. Again, we progress this trade to the point where we cannot possibly lose, and it's just about taking as much profit as we can. Now, what we've not done to focus, we have not taken the absolute top. We don't intend to. We're looking to take the safe amount of pips, but we've got out as the market has started to lose its momentum, and as you can see, it regresses down and it actually goes below our entry. This is what this trading stop is designed to avoid, okay? If you'd have just held this trade hoping for the best over the long term, you'd have turned a winning trade, a really nice winning trade, where you could have made 1% plus, into a loser. You'd have come out, you'd have been sore, and you'd have wasted a few hours of your time. These trading stops, especially when you first get started, are really good at keeping you focused when trading these markets. So that's 4 trades we've taken. It was an 18%, a 21%, about a 6%, and a 1.25% entry. We are taking loads of trades like this. You can really ratchet up the number of entry signals you get on this. The more entry signals you add, the lower probability they are, so they do require more management. But as you get more advanced with this, which is going to be just through practice and also the coaching and workshops that we provide, you can really start to trade these markets actively. There's a lot of opportunity in the crypto markets if you're not paying attention to them. It was a little bit more forgivable when things were quiet and slow, but now these markets are moving. I mean, it's one of the best markets to trade in. Hopefully, I'll see you in a couple of workshops with us soon.
Want to learn how to find profitable trades like this? Register for our free trading webinar and discover the strategies that turn you into a confident trader. Prefer a more hands-on approach? Schedule a one-to-one walkthrough with a senior trader. See our software in action and get those questions answered, and take control of your trading journey.